Welcome back to Investing Talk Podcast.
Hey, everyone.
Today we are diving into a company that's been making some waves, definitely generating buzz in that whole domestic supply chain, battery materials space, Westwater Resources.
Right, a really interesting one. Lots happening there.
Yeah, and look, our mission today, it's not about reading you a dry prospectus. We want to cut through the noise.
Exactly.
We're analyzing the core evidence, the technical momentum, what's happening operationally, and, well, let's be honest, the pretty big financial gaps.
Glaring, some might say.
Right. To answer that main question for you, the listener, is Westwater Resources a stock you should consider buying right now?
That's the goal.
But hang on, before we get into all that, please take a second, hit subscribe if you haven't, like this analysis, leave us a comment.
And yeah, please do. If there's a company you're curious about, one you want us to dig into the sources on next time, just drop the name in the comments below. We really do look at those.
We absolutely do. Okay, so Westwater Resources.
Right. And the mission is key here because, like you said, it presents this this paradox almost immediately.
How so?
Well, if you try to apply your standard, fundamental analysis toolkit,
Yeah.
you hit a wall pretty fast. You just can't value this stock on current cash flow or earnings. It's not there.
Okay, let's unpack that first. This financial void you mentioned. What exactly is missing that we'd normally expect to see?
Well, it's standard stuff for most public companies, but Westwater is fundamentally different right now. It's in that pre-revenue development stage.
Ah, okay.
So what that means is, looking through official SEC filings, your 10Ks, your 10Qs, we just couldn't find recent quarterly revenue growth figures.
None.
No verifiable profit margins, no details on recent earnings beats or misses. That data isn't publicly available in the usual places for the recent periods.
So that implies no clear picture of balance sheet strength either. We don't know their current debt levels, their liquidity situation, or crucially, if they're generating any free cash flow today.
Correct. There's no direct, easily accessible public evidence for those current financial health metrics. We know the sector they're in, battery materials, graphite, lithium, it's
Right.
hot.
Very hot, strategic.
Absolutely. But without that recent financial data, without those official filings being up to date on operations, you can't really quantify their competitive edge,
Yeah.
or their market share, their pricing power.
Yeah.
Not in real time anyway.
Okay, so the key takeaway here for you, the listener, has to be this. If you're building an investment case for Westwater Resources, it can't really be based on proven financial performance. Not right now.
Exactly. It's not a cash flow story today. It's purely a bet on developing a strategic asset. It's an execution play.
Which means we have to pivot, right? We have to look at their operational execution, the news flow, and importantly, the technical signals from the stock chart itself.
Precisely. We're kind of flying without that fundamental map, so we have to look at where the momentum is, what the chart's telling us. And right now, this stock seems driven much more by speculation and development news than by, say, EBITDA.
Okay, but here's the tension, right? Despite those, let's call them fundamental gaps, the technical picture, the chart itself, has actually been, well, pretty strong recently.
Exceptionally strong, actually. Yeah, the data we reviewed as of around October 8th showed the stock had put together a really impressive 6-day winning streak.
6 days straight.
Yeah. And just looking back over the 2 weeks prior to that, the stock surged, what was it, 34.86%. A big move.
Wow. Okay.
And that volatility is, it's kind of typical for these development stage companies, but the momentum is undeniable. We saw the stock trading around $1.53 recently.
Which is a big recovery from, weren't the lows somewhere around 75 cents not long ago?
Exactly. It hit lows like 75 cents, maybe highs of 83 cents back in July. So
Okay.
seeing $1.53 suggests pretty aggressive buying when it dips. Buyers are stepping in.
So what are the actual trading signals saying? The moving averages, MCD, that sort of thing?
Well, the signals generally point towards high speculative interest. It's a bit missed, actually. The short-term moving average might suggest a sell, but the long-term average is indicating a buy.
Okay.
But critically, the short-term average is above the long-term, which typically generates an overall buy signal for technicians. And the 3-month MACD indicator. That also reinforces a positive technical buy signal right now.
And analysts. Any short-term projections?
Yeah, the consensus, although based on limited coverage, which we'll get to, projects a potential rise. I think is around 45.14% over the next 3 months.
Hold on, though. Let me push back a bit here. You're saying the charts look strong. Analysts see maybe 45% upside short-term.
Yeah.
But we just established this company has, well, limited cash visibility, and they're in the middle of building a facility that costs hundreds of millions of dollars.
Right. That's the crux of it.
Doesn't the risk of, say, future dilution or maybe a financing deal falling through, doesn't that just overwhelm these bullish technical signals? Isn't that the elephant in the room?
That is absolutely the critical question you have to ask.
Yeah.
Yes, that high volatility, it attracts the momentum trader, sure.
Sure.
But it also means the risk of a sharp, painful reversal is, well, exponentially higher than with a stable, established company.
So it's an exciting chart.
It is.
Yeah.
But you have to recognize it's potentially built on a, let's say, a thin financial foundation at this exact moment. Huge potential, huge risk.
Okay. So if the technicals are strong, that buying pressure, it has to be fueled by something tangible, right? Something happening on the operational side.
It does. Otherwise, it's just froth.
Let's dig into that. What's the recent news, the catalysts that are likely driving this momentum? This has to be the core of the bull case.
It absolutely is. And it really starts with the bigger picture, the macro environment. Westwater got a massive boost, a structural tailwind, back in July 2025.
What happened then?
That was when the U.S. Department of Commerce issued its anti-dumping ruling specifically on Chinese graphite.
Right, I remember that. Finding unfair trade practices. So what does that practically mean for a company like Westwater trying to build a domestic source?
It's huge. It effectively creates this protective tariff barrier, a kind of moat. It highlights how strategically vital domestic production is to fill that U.S. supply chain gap. Suddenly, Westwater's project isn't just a good idea, it's strategically essential.
And potentially much more profitable behind those tariffs.
Potentially, yes. It makes the economics look much better, assuming they execute.
Okay, execution. Let's talk about the Kellyton plant itself. Since we can't really measure earnings yet, we have to measure, well, construction progress. Bricks and mortar, basically. What did that August 2025 update tell us?
The progress seems pretty substantial, actually. They reported spending about $124 million to date.
Okay, out of a total expected phase-I cost of?
Around $245 million. So yeah, they're over halfway there in terms of the financial commitment for Phase I.
That's significant progress.
It is. And maybe more importantly, they said they've received about 85% of the necessary equipment. Key stuff is moving forward, connecting to the power grid, installing the first big mills, the micronizing and spheroidizing ones.
So hitting those kinds of physical milestones for a company like this, that's kind of the equivalent of a big earnings beat for a regular company, right? It shows their delivery.
Exactly. It moves them from just having a plan on paper deep into the execution phase. Very important signal.
But it always comes back to the money. How are they paying for the rest of the construction, that remaining $120 million or so, especially with unclear cash flow?
Yeah, that's the key operational risk right now. They're working hard on the capital structure. As of August 11th, they had about $12.5 million cash on hand.
Okay, not a huge amount given the spending rate.
No, but it was supported by some recent convertible note issuances, and they're actively trying to syndicate a much larger debt facility, around $150 million.
That's the big one.
That's a big piece. But probably the biggest potential catalyst driving the stock right now is news related to the Export-Import Bank of the United States, the INCM Bank.
Ah, government backing.
Potentially. The company announced that XM has started its due diligence process on their loan application.
Wow. Okay, getting a U.S. government loan, especially for a project flagged as strategically important domestically, that would be a massive de-risking event, wouldn't it?
Huge. Game-changing potentially for their financing path. But let's hit maybe the most impressive operational detail they've shared, the one concerning actual demand for their product.
Okay, what's that?
This is crucial. Management has stated that 100% of their anticipated annual Phase I production of CSPG, it's already under contract.
100%. Wait, let's pause on that. 100%.
That's what they've indicated, yes.
And this isn't just raw graphite, right? This is CSPG, the coated, spherical, purified stuff, the high-value material batteries need.
Exactly. The value-added product that battery makers desperately need to, reduce reliance on foreign, mainly Chinese, sources.
So they've essentially locked in buyers for everything they plan to make in Phase I before the plant is even finished. That seems to completely de-risk the sales side of the equation.
It largely does, yes.
Yeah.
It validates the market demand entirely. It proves people want this specific product from a domestic source. So the remaining big risks really boil down to execution, building the plant on time and on budget, and of course securing that final tranche of financing.
Okay. So looking ahead, what are the key near-term catalysts? Things we need to watch over the next, say, 3 months that could really move the needle here?
November 2025 looks pretty critical. We should get their Q3 earnings report, more of a progress report, really.
Oh, really?
And very importantly, hopefully an update on that Exim Bank loan application status. That'll be closely watched.
Definitely.
And then the really big operational target is hitting Phase I construction completion. The company's target for that is December 2025.
End of this year.
End of this year. If they hit that milestone, they really transition from being just a development story to becoming an actual producer, ready to ramp up. Huge inflection point.
Okay, makes sense. Now let's put our critical thinking hats firmly back on. We need to address the risks head on. What are the most severe company-specific risks we need to hammer home?
Yeah, absolutely necessary. First, we have to reiterate the extreme price volatility. The stock can swing wildly. Second, the high execution risk. Building these complex materials plants is hard, delays happen, costs overrun. It's common.
And the financial visibility.
And third, yes, that inability for us, as outside analysts looking at public data, to fully verify the current financial health because of the lack of those recent official revenue and margin reports. Unforeseen costs or delays are almost standard for projects like this, and we don't have a clear view of their cushion.
What about Wall Street's view? You mentioned analyst projections earlier, but how much weight can we really give them if coverage is thin?
That's a really important point. The reported strong buy consensus loses a lot of its statistical significance when you realize it might only be based on one or two firms.
Do we know who covers them?
We know H.C. Wainwright has coverage, and they have that $2 price target we mentioned. But with such limited formal coverage, the stock's price becomes highly sensitive to sentiment, to news releases from the company itself, rather than broad, deep institutional analysis.
Makes sense. And with stocks like this, a lot of the excitement comes from, well, rumors, speculation, the high-risk, high-reward stuff that could happen. What kind of speculative buzz is floating around Westwater?
Well, the big rumors, the ones that could really be future catalysts, tend to revolve around potential strategic partnerships.
Okay.
Given Westwater is one of the most advanced domestic natural graphite projects, you hear chatter about maybe a major auto company or a big battery manufacturer taking a strategic stake, maybe an equity investment.
Why would they do that?
To lock in their own domestic supply chain access. Secure that graphite. That would be huge validation.
And bring in capital without necessarily diluting existing shareholders too much.
Exactly. That's one angle. You also hear whispers about maybe more government support beyond XM, perhaps Department of Energy loan programs.
Possible.
And then there's always the M&A angle. Could a larger mining company swoop in and buy them to get a quick foothold in this tariff-protected U.S. market?
Right. But these are all just possibilities, rumors.
Precisely. High-risk, high-reward rumors at this stage. Nothing concrete that we've seen confirmed.
Okay, let's try to pull all these different threads together now. We need an investment thesis.
Yeah.
The sources we looked at, they seem to land on an overall bullish rating, right? Around 6.5 out of 10.
Yeah, that's the blended rating that came through.
Given everything we've just discussed, the financial unknowns, the execution risks, why such a relatively high bullish rating, a 6.5 isn't exactly bearish.
No, it's not. And that 6.5 really reflects that intense tension we've been talking about, the huge gap between the risk and the potential reward.
So the rationale is?
It's built almost entirely on that strong technical momentum we saw. The very clear sector tailwinds, the strategic importance of domestic battery materials helped by those tariffs, and then that unproven but potentially massive speculative upside.
Blue sky scenario.
Exactly. We've seen some long-term price projections mentioned in sources that go as high as like $11.23. Now, that's obviously highly volatile, purely speculative, depends on everything going right. But it speaks to the perceived potential if they pull this off.
Okay. So for you, the listener, trying to decide if this fits your portfolio, how should you think about the investment horizon? Is this a quick trade or a buy and hold for years kind of situation?
I think it breaks down pretty clearly into two different profiles. For a short-term trader, someone focused purely on technicals, it looks potentially attractive as a high-risk momentum trade. You'd be watching those chart signals, those breakout levels, like maybe that old resistance around 84 cents that was mentioned.
Quick in, quick out, maybe.
Potentially. But for the long-term investor, it's a very different proposition. It's a high-risk bet that hinges entirely on management successfully finishing construction, successfully securing that big financing package, the $150 M debt or the XM loan, and then executing flawlessly on the commercial ramp-up next year. It's a multi-year execution story.
So it really comes down to this paradox, doesn't it? On one hand, you have what seems like proof of demand, 100% of phase I output is apparently spoken for under contract. The market wants this material domestically.
Yep, demand seems de-risked.
But on the other hand, the money needed to actually make that material and fulfill those contracts, that's still somewhat uncertain. It seems heavily dependent on getting that XM bank loan approved or syndicating that $150 million debt facility.
That is the absolute core calculation you, the listener, need to make right now. Given that the demand side seems locked in, the buyers are lined up, how much does successfully nailing down that external financing actually de-risk the stock overall?
Especially the XM loan, right? Government backing feels different, especially the XM loan. If they secure that government-backed facility, you could argue the company shifts dramatically. It moves from being primarily a speculation play to primarily an execution play. So the question to ponder is, what's the true long-term strategic value of a guaranteed domestic producer in this industry, an industry that's not only strategically critical, but also heavily tariff protected right now? What's that worth if they get the funding?
That really is the multi-million-dollar question for Westwater Resources, isn't it?
Okay.
One final critical note before we wrap up. As we've stressed, this entire analysis, everything we've discussed, is limited by that lack of recent official financial statements, the 10Ks, the 10Qs.
Crucial caveat.
Absolutely. So please, use this discussion as a starting point, a foundation for your own research. But always, always seek out those official company disclosures for the complete, verified picture before making any investment decisions. Caution is definitely, absolutely warranted here.
Couldn't agree more. Do your own homework.
All right. Thank you for joining us on Investing Talk Podcast.
Thanks, everyone.
We'll see you next time.